Hey guys, so quick trade breakdown from yesterday's trading day. So today, no, yesterday we had CPI Friday. So that's our daily chart right here. You can see we basically broke out of the price range right here. We are now back to all-time highs, also like created a new higher time frame gap. So a new day opening gap, I guess. Um, and yeah, so let's drop to the 50-minute chart. So we have London highs right here, London lows right here. We have the midnight opening price. We have New York open kill zone right here, 8:30, where CPI news hit basically. New York open kill zone high, and also like as you can see, we basically only traded within this range. We could not really trade higher or lower. And but before I show you my executions or drop lower to the 1-minute chart, I want to show you regular trading hours. So really important, we have a higher time frame, or no, a new opening range gap higher, so basically almost 200 handles. Therefore we are in trending conditions, and we want price to see basically trade back to the upper quadrant and then follow the trend trading higher. But as you can see right here, we actually did not were able to trade back to the upper quadrant. We only traded slightly higher with the trend and basically consolidated right here. So let's maybe take a look on ES right here. So actually quite similar. We also like broke out of the daily range, also at all-time highs. And if we look on the 50-minute chart, yeah, we basically still also don't have any market maker buy model being in play. So London lows are intact, New York open kill zone sell liquidity is intact, and yeah, we just traded higher and continued with the trend. So back to NQ. Maybe let's drop to a 5-minute chart first. Actually not really anything new. So we have like this huge 5-minute wick, which is definitely a inefficiency. And now let's drop to the 1-minute chart. So right here we have 9:30, so the opening price. With that we basically start our AM session, and then we traded lower and traded instantly higher, sweeping the buy side liquidity of New York open kill zone, and then we are basically in a really good opportunity to look for shorts. Why? Because we basically took out every session liquidity. We swapped daily buy side liquidity. There's no market maker buy model being in play because we did not sweep any session sell side liquidity, so we did no damage to the sell side. And also, as you saw before, regular trading hours, we did not trade it to the upper quadrant with the opening. So therefore, this low is actually really good sell side liquidity, but yeah, we definitely failed to reach the upper quadrant. So therefore, it's reasonable to look for shorts in my approach. So, but yeah, as you will see right now, lots of shorts taken in here, and lots basically all of them failed. So we eventually traded a bit lower, but we got eventually stopped at, and then also right here tried, got stopped right here above the candle, and then we traded a bit lower, but we could not take out the low right here, and actually we just consolidated. And I think if the ATM model or the 10 macro fails basically to reach our objective, the trades which follow will basically likely fail as well. So therefore we can, because maybe we have a Friday and we broke out of the range, so with that the objective is met for the daily chart, and we will just don't move and just keep trading within the price range right here. So yeah, but definitely the low of the newest candle right here is definitely really a strong draw for price, especially because it's not only a news data low, but also because it's the low of New York open kill zone, so within the time window right here. And also we have London lows, we have the opening prices, we are oversold, we are above every opening price, so really good short opportunity. Actually, I followed my system. I would not follow it if I wouldn't have taken like the short. So therefore, it's actually I'm content with the loss. But I think what I have to learn is that if like basically the setup at the 10 a.m. macro basically fails, we should not expect any price movement to the downside later on, or it's basically more unlikely. And what I've liked to see is basically that we trade lower, take out the low right here, and then continue with the trend higher after we traded to the upper quadrant of the new opening, no, of the opening range. So from regular trading hours, if we just basically trade lower and then continue with the trend higher after we swap basically session liquidity, then a market maker buy model would be in play, and we could have like basically had really good long opportunities then as well. But with that, we don't want to chase price higher, so I'm just looking for shorts. That's my approach. That's the for me the right way to trade, but definitely failed yesterday. And it really hurts if like basically your perfect model fails to deliver. But yeah, that's just part of the game. So sometimes or most of the time we lose because of ourselves, because we do something wrong. But actually, if we do everything right, we still can lose. So that's something we have to accept. And I think that's basically it. Nothing really special. And probably in the future we'll have like also a daily loss limit. So it's kind of not the right way like to hope that we will trade lower eventually after we failed like 1, 2, 3 times. So then we just shouldn't trade. And therefore, like, I don't know, $100 for me, for my trading approach with like a $2,000 account would be reasonable, I think. If I like trade a 50k funded account. But yeah, we will see. That's basically it, and yeah, see you soon.